If you've ever found the perfect fix and flip, but didn't have enough cash on hand to close, this is the perfect video for you. See, the thing is, everyone talks about finding deals, but nobody talks about funding deals. And 9 times out of 10, that's where investors get stuck. In the end, what people realize is you don't need deep pockets to flip houses. You don't need a whole pile of cash or friends and family with money to flip houses. You just need smart financing and fast execution. My name is Michael Chadwick, and I've financed countless fix and flips over the last decade in the hard money space. But prior to that, I was in your shoes as an investor. I did my first fix and flip as a house hack, in fact, and I've done over 100 fix and flips since on the ownership side. So today I'm going to talk to you a little bit about how to finance your first fix and flip and what sources are available and how to go about getting the first one done, and to not put roadblocks or artificial barriers in front of you from going out there and getting the right financing for your fix and flip. Most investors will walk right into a bank and get turned away about as fast as they walk in. And so fix and flippers who are bankable, in fact, I would say 9.9 out of 10 borrowers of mine are bankable and use banks all the time for other things. They're coming to me for fix and flips because they know we can approve loans in one day. So let's talk about the 3 main ways investors fund fix and flips. And that's hard money lending / private lenders. At the end of the day, I do believe that you have 3 real viable options for growing and scaling a fix and flip business, or just getting into multiple fix and flips, and that's going to be hard money lending, private lending. So let's talk about hard money lending and just private lending in general. So there's really, in my mind, and we're able to shrink down the closing time to 10 days on average because we don't have all that regulation. Hard money lenders are looking at your experience in the space, and will fund first timers all day long. We're looking at a minimum credit scores, minimum liquidity, and we're looking at the project and what you can do to create value. And we're able to do it quickly and move through the process because that's what private credit has been able to do. We've solved the problem of speed. And private money lenders to me are lawyers, doctors, dentists, local, because they know who you are. They have the ability to know local regulations better than maybe a national private lender, hard money lender. They can do a level of underwriting on you, on the project, that a national lender looking to scale and grow a portfolio simply can't do. And what I find is that a lot of first-time investors get started this way without even knowing it, where they find an opportunity. Private money lenders are more expensive. They have higher interest rates. But in return for that, they can get over underwriting hurdles that you might face from banks or from private lenders, such as minimum credit requirements, or they may, hard money lenders, private lenders may look towards experience on an extensive rehab that a private money lender who knows you and knows your background may be willing to accept that risk and just close. So private money is a great source of funding for investors. It's just more difficult to know who these players are because they're typically not advertising or promoting their business like, a private lender like myself would, where we're out professionally with programs actively looking to grow. Also, too, another downside I would say to private lending in general is that there's usually a finite amount of money. So the big question is what do lenders like myself look for in a borrower? And the first question I'm going to ask you is, what's your exit strategy? Let's say you're buying a 2-family and you're coming to me to do a purchase and rehab, a fix and flip. You're going into my fix and flip program. That's great. Well, the flip might be that you are going to refinance it out. And if that's the case, if you're looking to just do renovation and a sale of the property, well, that's fine. And there may be a couple less steps in terms of the way that we're going to underwrite it. We won't necessarily look to the rents, and the cash flow to repay us. We might just look at the scope of the rehab. The scope of work clearly needs to be spelled out, which demonstrates that you know what is required to achieve that after repair value, but that we're going to use that budget as a guide and as a template to move forward and fund construction draws post-closing. And then ultimately, we're going to put the whole thing together as a lender. We're going to look at the whole package. We're going to say, borrower's experience there relative to the scope. Yeah, okay. No experience, fine. It's a cosmetic rehab. Good. High experience, we're going to approve, heavy rehabs all day long. So let's break down how a fix and flip would be structured, whether it be with a hard money lender, a private money lender, even a bank. All lenders are going to look at a fix and flip and say, we're going to fund a certain percentage of the purchase and a certain percentage of construction. There's a lot of different structures, but generally banks are more conservative in the amount they lend as a percentage of purchase or as a percentage of the after repair value. The way that you would structure any deal with like we said, is percentage of purchase plus 100% of construction. With a hard money lender or private lender, you're going to get anywhere between 80 and 90% of the purchase price plus 100% of construction. And I would say 95% of the time, private hard money lenders are going to always lend you 100% of the renovation money. And the variable becomes what we fund at closing. So the most profitable deals with the most experienced borrowers will get as little as 10% down, with the lenders funding 90% of the purchase plus 100% of construction. So at the end of the day, let's go through a quick example. You're buying a house for $300,000 and you're going to do a $50,000 rehab, and the house is going to be worth $525,000 when it's done. There's tons of value upside there, right? There's a lot of profit to be made. And so the value isn't really much of a concern. So we're going to be looking at this project as simply a $320,000 loan. We're going to fund $270,000 at close, and we're going to fund 100% of construction, or the $50,000 through construction draws. So at the end of the day, the more experienced you are, the more aggressive a lender will be in terms of their leverage going in at closing or how much you have to put down. More experienced people will get less down, or the ability to put less down. Less experience will require more skin in the game, more down. So the biggest mistake I see investors make, bar none, is that they chase interest rates and they lose complete track of the deal itself in search of the lowest interest rate. And it hurts them for two reasons. A, speed and certainty to close are out the window when you deal with a bank. So if you're looking to buy opportunistically, buying property at a discount from what it's really worth because you can close quickly, that's off the table with a bank. That's not what the sellers are going to be looking for. They want certainty to close and they want speed to close. And hard money lenders offer both of those things, and banks simply don't. But the number one overriding, common mistake that I see investors make is they focus too much on interest rate and not in getting the deal done, and getting it done with their own capital and putting as little down as possible. It's just hard money fills the void that banks have left. And therefore, when you look at us and you put it into the context of getting the overall transaction done and you price it accordingly, hard money is the way to go when it comes to fix and flips all day long. Fix and flip financing isn't about getting lucky. It's not about knowing a guy who knows a guy. It's about simply understanding that there are alternative tools like private lending, hard money lending, that are available to you that will make your ability to invest that much easier. It will scale not only your capital, but your time, and it will put you in a situation where you can potentially be transacting far more than if you go to other traditional sources. You got to look to hard money and to look to folks like myself and to use me, Mike Chadwick. I'm a loan officer. Call me, message me, leave comments if you have any questions, but utilize tools and resources like myself, Asset-Based Lending, the sponsor of the video, to be able to unlock your potential as a flipper, to be able to allow you to fund that fix and flip that you just found that is a home run. We're here to facilitate transactions. We fill a void in the marketplace left by banks, and we're transacting day in and day out. So listen, guys, if you like the content, please like, subscribe as always. And again, don't be shy. Reach out to me if you have any questions about fix and flipping or our financing programs in general. Thanks again for watching. Can't wait till the next one.